So I think I'm live now. Um, I want to be sure that everyone can hear me. Glowy, we're live. I want to be sure that everyone can hear me. Glowy, we're live. What is going on, ladies and gentlemen? How are you all feeling today? Um, sorry. Where's the mute? Thank you. What is going on, ladies and gentlemen? Drop in some sevens if you guys can hear me loud and clear. I am super, super excited. I am elated to be on here with each and every one of you. I remember, so we just started this series, and I could recall that as at Monday when we had the Forex um, training, right? I was talking about looking for an app, um, a streaming service that I could leverage over and then connect with YouTube. Thankfully, I have amazing friends. I have an amazing friend who suggested this, and we're good to go. So please just let me know on the YouTube chat. Let me check this. Oh, why did he not open live chat? He didn't open live chat. Okay, so for those of you who can hear me, if you can hear me and you have my WhatsApp contact or my Instagram handle, please just type in the number 7. Send it as a text to me. I want to be sure everyone can hear me before I proceed. I want to be sure everyone can hear me before I proceed. I want to be sure everyone can hear me. So please just send me the number 7 via text, either on my Instagram or on WhatsApp. Let me know you all can hear me. It's going to be an amazing session. I promise you. I'm just so excited about this series and the next level. The next level of finances, the next level of financial upgrade is going to give to so many of you. Oh, I think I just got a comment. I think I just got a chat. Fantastic. Everyone can hear me. Good. Brilliant. 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 So I want to welcome each and every one of you to today's session. My name is Emmanuel. I've been trading the financial market, practically Forex, the currency pair market or the Forex market for over 4 years now. I do it full time. I'm full time on this, and it's been so amazing. But what stands out for me is the opportunity I've been given to impact others, to duplicate success, to help others attain financial elevation, just basically duplicating the things I do in the forex market space. So today we're going to be talking about volatility index trading. In parentheses, we're specifically going to be talking about synthetic indices, right? And someone texted me not too long ago and said, I'm trading. I think he said my boss is trading the reef. Now, actually, I've been trading synthetic indices. I've been trading it for I've been trading it since last year. I think I started early last year, and I'm not saying this so you think it's normal to flip account, right? Like literally can recall that the accounts are flipped in forex trading were the ones I traded on utilizing synthetic indices. That's to tell you how volatile this market is. It's not something you can compare with forex, right? It's amazing because it's open 24 hours, 7 days a week. It's amazing because economic events do not affect it. So for those of you who are familiar with forex trading, you would recall that for those of you who are familiar with forex trading, you understand that we have news updates, right? Forex Factory and Co. You have those news updates. It could be NFP, it could be whatever different consumer goods, whatever Bank of England governor is speaking, those fundamentals that will just happen and then will turn the market upside down or will make the market go in your direction. Yeah. Synthetic indices don't have this stuff. They are not affected based on economic events. So it literally, I would consider it to be that part of trading the financial market that is stable, right? It's one that even if you are full time into your job, you can work this part time, right? And the amazing thing is, the same strategy I've been utilizing to trade for the past 4 years now is also something that you can use to trade synthetic indices. Now, synthetic indices, there are so many of them. I, I know about boom, crash, although I've never traded those instruments before. But you have instrument like volatility 25 index, volatility 50 index, as you can see on the screen right now. You have let me see. Yes, good. You have volatility 10 index, you have 25 index, you have 50 index, you have 75 index, you have 100 index. These are the things I trade on. Right? These are the instruments I trade on. There are so many of them, like I said. Boom, crash, whatever name you can give any of them. I don't concern myself with things that I'm not prepping to utilize. So I just restrict my focus on the things that would make me money or the things I want to earn me money. Right. So don't be upset if I don't have so many information about it. No, I don't need so many information about I don't need so many information about it. Another amazing thing about synthetic indices is accessibility. You don't need big capital, right? For those of us in the foreign exchange space, we've been blessed with prop firms, right? You have little amount, you're using it to access big amounts to trade. But what about individuals that do not even know about those prop firms, right? You could literally set up a synthetic index account with a broker that offers you the opportunity to open an account with as low as $50, right? You could open with $50, $100. In fact, you could open with as low as $20 actually. Last year, one of the accounts I flipped was a $25 account. I took the account to $132 in 2 weeks. I withdrew from it, left $50, took $50 to I think about 225. Now, I would have continued with synthetic indices. But the problem with me was the fact that I was teaching traditional forex. My focus was on traditional forex, so there was practically no way I could also follow up with synthetic. I was really making money. I remember I had this friend of mine, a brother of mine, who got to know about synthetic through me, and then he just leveraged it, and I think he took about $100 to almost 8,000 US dollars. And these are funds you withdraw ASAP. They are not the brokers. Derif is one broker I use to trade synthetic indices. If you need more information about the brokers and how to go about them, you can reach out to me on any of my social media contacts. But what I'm saying is the kind of brokers you use here, especially Derif, for instance, you get your pay swiftly. You don't have to struggle to do anything. The moment you make the money, you make the withdrawals, and you are good to go. Another thing about them is they offer 24/7 trading access, right? So for traditional forex, the market is open 5 p.m. Eastern Standard Time, which is about 11 p.m. Nigerian time on Sunday, and closes 5 p.m. Eastern Standard Time on Friday, which is about 11 p.m. Nigerian time on Friday. But synthetic indices are open 24 hours, 7 days a week. They're open on Christmas Day, they're open on they're open on New Year Eve, they're open on Easter break. So it's like you have access to trading 24/7 without no restriction. Right. And ladies and gentlemen, just in case you got in here by chance, you probably don't know anything about Forex, or you're just thinking you've been hearing about it. Let me tell you one big deal about trading the foreign exchange market space, irrespective of the instrument you are conversant with. It's it's a space where you don't have limits. Your income per job, your income as regards your job is capped. The profit you make as regards your business is capped. The investment, your return on investment as regards your capital is capped. all forms of earning income are capped. But when it comes to trading the financial market, it's never capped. And that's why if you look at the last decade, if you look at the last decade, anything that relates to trading or exchange has made the highest number of millionaires statistically. That's the fact. Anybody can, I get the fact that people can lose so much money within the shortest frame of time, no doubt about it. But guess what? If there's any space that can help you earn money, right, help you become a millionaire overnight, I tell you, it's the trading space. It's the exchange space. For those of you who trade coins, exchange, Binance, all of those stuff, you definitely would know what I'm talking about. For those of you who buy airdrops and all, you know what I'm talking about. And for those of you who equally trade the financial market, you still know what I'm talking about. Right? So the amazing thing about Forex is it gives you access to an uncapped income. Right? Your income is not capped. Yes, it could be a trap as well, because the fact that your income is not capped, so is your risk. Right? But the amazing thing is, I'd rather choose to participate in an environment where I am not restricted to a certain amount, or I'm not restricted to a certain point of financial growth. I'd rather love to participate in that space than to work in a space where I know no matter the effort I put in, this is the highest I can get. And that's what most people are doing at their jobs today. But so just consider yourself lucky and fortunate to be in this space. It was for me, see, it was one of the things that stood out for me back in year 2019 when I started learning how to trade Forex. Until date, it doesn't matter how much you have. If you're earning it from a job, I don't consider you to be financially free. You know why? Your income is dependent on your boss. Your income is dependent on the company's profitability. My income in trading the financial market space is not dependent on anyone. So I'd consider myself to be financially free than someone who is earning 50 million naira from a job every single month. It's not about the funds, it's not about the amount you're earning, it's about the freedom of having to spend it. Right? It's about doing the things you want to do to earn it. Right? So another big advantage about synthetic indices is that I just list everything here. I told you I don't like putting so anything that has to do with theory, I don't like putting it in mind. It's about risk management. The opportunity you have here is you can risk little to make more. You can put in $10 into a derivative account and use that $10 to make as high as 1,000 US dollars. I'm not capping. It's possible in synthetic indices. It might not be, it's also possible in Forex trading or in Forex exchange, but it's quite difficult in Forex exchange compared to in the foreign exchange markets compared to synthetic indices. As long as I take a short position or a long position in synthetic indices and I set my stop loss, guess what? As long as it's going in that direction, boom. So these are the things I just wanted to introduce to you as regards synthetic indices. Probably over these sessions, this is a recurring session every Saturday. It's supposed to be by 8 p.m. but I won't be available by 8 p.m. today, so I decided to do it for 5 p.m. But going forward, every single Saturday we'll be having this by 8 p.m. Nigerian time, GMT +1, depending on wherever it is you're connecting from. Now let's talk about the ARC strategy. So the ARC strategy is a strategy developed by myself. I'll tell you something. I started learning to trade with the price trap strategy in year 2019. So the ARC strategy is more like an elevated version of the price trap strategy. I learned the price trap strategy from an amazing educator, and then I developed it as market was evolving, as things were changing in the market. I evolved with the market and had certain criteria, certain rules of engagement with the strategy. And at a point, I just felt like, you know what, I can't be calling this price trap when the components that makes the strategy is not price trap component. So I decided to just upgrade it and then name it the ARC strategy. It's called the Arcane Retest Confirmation Strategy. And if you look at my videos on YouTube, you'd see breakdowns. I have breakdowns. I literally broke the strategy down into 3 parts. You have it's purely a price action strategy. Has nothing to do with indicators whatsoever. I'm not someone who believes in indicators. I have never traded with indicators in the traditional forex space. The only time I considered using indicators was when I was trading binary options, HFX, right? There, as far as the traditional forex space is concerned, I am not someone who trades with indicators. So it's just basically price action, support, resistance, and trend lines, right? So the strategy is divided into three parts. The first part is support. The first part is identifying and drawing support and resistance zones. The second part is the break and retest of these zones. And then the third part is confirmation and execution of trades. It's as simple as that, right? I'm just going to do a quick. I have less than 10 minutes. Man, time flies. I'm just going to do a quick introduction of the strategy on here. As we move, as we proceed over time, you get to know more about this. So this is R25 volatility 25 index. I'm on the 1 hour time frame. Let's just do a little bit of back testing. Now, somebody would say, well, what exactly is back testing? Back testing is simply that action, or it's that activity that gets you into utilizing the strategy, a particular strategy in the past market to understand its profitability. See, the market repeats itself. Whatever is going to happen in the market today or tomorrow would be a repetition or a reversal of what has happened in the past. I need you all to listen to me to this statement carefully. When people lose money in forex, they lose money based on so many factors. But when people win in forex, they win in forex based on few factors. Did you get that? The people who lose money, they lose money based on so many factors. The ones who win, they win based on few factors. However, people switch it over and over. People turn it the other way around. Some of you are on this, some of you are listening to me right now. You think the only way you can trade forex is by knowing a whole bunch of things. No. In fact, the truth is, the more you know in forex, the complicated it becomes. Because as long as I can provide a strategy, as long as I can introduce a strategy that helps me earn money 70% of the time, guess what? My ability to stick, my ability and stickability to the strategy would be what will make me a profitable trader. So if the strategy rules of engagement is if A happens and B happens and C happens, execute D. If that's the rules of engagement, my ability to profit with that strategy is for me to consistently follow that rules of engagement or those rules of engagement diligently. I'm not supposed to follow the rules of engagement, win a trade, win the second, and then when I lose the third trade, I start thinking of, oh, I think I should add something to this strategy. That's what makes so many people lose money. When you can follow the rules of engagement of a strategy, a profitable strategy, guess what? With proper risk management, you can be guaranteed to be a fantastic, phenomenal, and profitable trader. I'm saying this out of experience. I'm not the trader that looks at I don't consider the number of trades you take to be what makes you a profitable trader. No. I rather focus on the quality. I'd rather take 2 or 3 trades in a week, right? Make 4 or 5% of my capital than to take 20 to 30 trades in a week and make 10%. Let me say that again. I'd rather choose to take 2 or 3 trades in a week, make 5% of my capital in a week, than to take 25 to 30 trades in a week and make 10%. Emmanuel, why would you choose to make 5% with few trades rather than win 10% with 30 trades? The truth is, we're all humans. We are guided with our emotions, right? I think it was Mel Robbins. Yeah, Mel Robbins said 95% of the decisions we make as humans we make based on our feelings. So when you understand that, you would literally recognize that at any point in time you execute a trade in the market, you've put in a part of your emotions into it. Forget the fact whether you risk 1% or you risk 0.1%, it's your money. The moment you enter a trade, the moment you execute a trade, you've 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 you, you've decided to part with a bit, excuse me, of your emotions. And so if you part with a bit of your emotions in the market, you lose the first day, you take another one, you win the second day, and you do that 30 times in a day, that person will become miserable. I'm saying this for those of you who are looking to trade forex. You don't want to be miserable. you don't want to you don't want to deal with forex from the standpoint of wanting to make money with it. No, you want to deal with it from the standpoint of wanting to multiply money. We also want to trade like the banks. We also want to trade with the banks. The question is this: how many people are looking to become like the banks? The banks do not take 50 trades in a week. Why should you take 50? Or if you take 50 trades in a week, do you think that's what will make you profitable like the banks? No, when you trade to multiply money, you understand that it's a game of quality over quantity. So volatility or synthetic indices, as the case is today, is one that you should just focus on one instrument or two instruments per time. Don't be everywhere. And you have a setup on 10 index, on 25, on 50, on 75, and then you just keep going. No, you don't need to do that. Just focus on one, focus on two. The more time you spend with one of these instruments or two of them, the more better you become at them. When you have a scattered focus on different things, there is no way you would master any of them. But if instead of scattering my focus on 5 different instruments, I decide to just channel that focus, have laser focus on one instrument, guess what happens? I would be able to master the moves. I'll be able to master the trends. I'll be able to master the directional trends of that instrument within the shortest frame of time. So I'd rather spend 3 months on one instrument than to spend 1 year on several instruments. I really wish there's a way I can ask if you all are listening to me. I'm so used to the Zoom way of communication, right? But I do believe you guys are still with me, right? So we have 10 index, we have 25 index. Let's work with 25 right now. Let me just give you an intro to the strategy. Backtesting. Now, backtesting simply means we want to put this strategy into play in the past market to see how profitable it would have become or how profitable it would have been if we traded with it. Now, one thing I do first is I come to the higher time frame. The higher time frame, there's something we call top-down analysis in the market. It's looking at the market from the perspective of the banks or major financial institutions, narrowing it down to a lower time frame and then executing trades on the lower time frames. Now, the reason why I look at the higher time frame like the banks will look at it is because I want to know where the market is coming from. I want to have an idea of where it's going to. If I know where it's coming from and I switch to a lower time frame, I can know how to be part of that movement. But if I don't know where it's coming from and I switch to the lower time frame, I could be misguided based on what I'm seeing on the lower time frame. So if you see what we have on V25 index right now, if I switch this to, I've picked this point right now as a reversal area. You notice price was moving up. When it got to this point, it pulled down. Now if I switch this to 1 hour, I want to go follow it up from that particular area it started from. I think by next week I'm going to have to work on my YouTube channel so that I can allow communication. I'm coming. Let me see. You can't comment. All right. So I'm going to have to work on that be ahead of next week. I have a professional here. She says she will do it for me. So let me just click on this so that I have a professional here. Why are you repeating what I'm saying? Okay, so now this is what we have here. So this is the V 25. Now you can see this is where I marked on the daily. All I need to do is identify this as a support, sorry, a resistance zone. Identify resistance zone with two lines and a box. Keep it simple. If there's anything amazing about this strategy, is the fact that I've been able to teach people that knew nothing about forex this particular strategy in a period of 1 month. I'm not capping, and it's because you don't need so many. You don't need bunch of information. Like you only need the specific ones that can help you make money. So if you look at this, this is how you mark. This is identifying and drawing a resistance zone. Now price moved down here, pulled back up, moved down here, pulled back up, moved down here, pulled back up. But guess what? I wouldn't consider this area to be a reversal zone. There's something we call swing arches. There's so many things to teach. There's so many things to teach. There's so many things to teach. Anyway, when you take a look at this, I could have this as a zone here. That's a support zone. I'm not just having it there as a support zone because of this move, but you can see these are areas of let me see. These are areas of rejection, reversals here. Remember, I told you that this strategy is based on price action, support and resistance with trend lines. Most of the time, I don't even use trend lines because if you notice what the market has been doing this past couple of days, you understand that if you're even waiting for the market to trend up, that's when it will start trending down. So this is also another area of this is an area of support. Put up a mark here. Right, the price equally pulled down here, moved back up. So you can see this is also another area of support. Remember, support and resistance zones are just based on rejections, reversals, retracement, any word you're comfortable with. Right? Price pulled down here, pulled back up. Did the same thing here. This is one I could work with. More like this. So because of that, I'll just work with these ones I've shown you. I don't intend to make these classes very a long class. No, it's supposed to be short ones. So this is also a support zone. And then if you need access to the inner circle, you can always reach out to me on Instagram. I do these trainings multiple times a week. So let's take a look at this, right, ladies and gentlemen. Now you'll notice here we have when price, I'm just giving you a breakdown of the strategy. Price did a break of structure with this particular candle here. That's at 2200 hours, about 10 p.m. Nigerian time. Right? When I get a break on 1 hour, I'd switch to 15 minutes to check the retest. So let's go check. I'm introducing the strategy to you, what I do. This is just basically what I do with the strategy. So on the 15 minutes, I synchronize this time to 22:45. So this is going to be 22:45 here. Now, take a look at this. Price did a break, pulled back up. Okay, so he did another break here. This is 45 here. He didn't come back to retest. There is no retest in this particular zone. And so when there's no retest, I do not enter into the market. I do not execute a trade. Remember what I said. A strategy is set of rules of engagement before execution. A strategy is what tells you this is what should happen, this is what should happen, this is what should happen, and then when all of these things happen, execute. So if this does not happen and this does not happen, there's no reason why I should execute. Most times, the people who lose money in forex, they think that, oh, This did not happen. Well, since this one has happened, if you're not rigid with your mode of entry, you can never have a consistent trading experience. If you're not rigid with your rules of engagement, if your rules of engagement are just based on, oh, I feel, oh, I think the market, oh, it's like, if those are your rules of engagement, you can never have a consistent trading experience. Your account will just continue to go back and forth. But when you know that, oh, this has to happen before I do this, and you stay true to that, that's where you can call yourself a disciplined trader. So look at this. Price broke this area on the 1 hour. That's 0 hours. If you switch to 15 minutes, let's check if there was an execution here. My time is up. I don't intend to go more than 30 minutes, so I'm going to be quite so let's see. This is 045 is here. Boom. Now, ladies and gentlemen, I want you to pay close attention to this. All of these green candles came into the zone. This is a form of retest. Yeah. But not my own exact form of retest. And I'll tell you why. The retest I look out for when trading is one that I'm looking for the word, is one that makes it compulsory for the green candles to come into the zone and close inside the zone. This particular green candle that came into the zone did not close inside the zone. It's a form of retest, but that's not my kind of retest. And I'm not the kind of guy that works with any form of retest. No, like I said, strategy is a rule of engagement. So if it's not this rule of engagement, I am not entering. There was no entry there. Hold on, we're going somewhere. And some of you say, two different scenarios now, no entry. Well, if you want to know the profitable, not even that. The best trades most times are the ones you did not even take. Oh my goodness, when you trade forex to an extent, you know what I'm talking about. The best trades sometimes are the ones you don't even take, the ones you just see play out. Now look at this. Price did a break at this point. Yeah. If I switch this to 15 minutes, we have a retest here. And look at how the market fell. So two scenarios now, I did not execute trade. Not like it's not like I lost money. I did not execute. My trading capital is intact. I'd rather have my trading capital intact than to lose money unnecessarily. Right? So this is it. If you move this to 145, boom, this is 145. Ladies and gentlemen, see what I was saying. Now this green candle closed inside the zone here. Let me put an arrow to that. Let me see. These tools are different from the one you have on TradingView. Okay, good. See, this green candle here closed inside of the zone. Right? Guess what? The red candle that came afterwards turns out to be the retest candle. Not only was it the retest candle, it's a confirmation candle. Now, what makes it a retest candle only? It's if it's a red candle that also closed inside the zone. But what literally made it a confirmation candle is the fact that it closed below the zone. So guess what, ladies and gentlemen? This would be my execution. My execution will be at the close of this red candle here. And if I'm risking the same, if I'm taking the same risk 1-to-1, did you see how this trade hits TP? Not only that, even if I was going to do 1-to-2 on this, did you see how it pulled down? So do you see the possibility of just executing this trade? Do you see the possibility of just executing this trade and then making so much from it as a reward for my patience in not jumping into the previous market? Let's leave this. Let's go back to 1 hour. Let's look out for another opportunity. So I'm going to take this away. That's a zone here. It means that price did a retest at this zone. That's what this means here. Right? Good. This is also another zone here. So this is a break here. This is a new break here. Now let's check 15 minutes. 15 minutes, 15 minutes. On the 15 minutes candle, you move that line to 45. So this is 1500, you move it to 1545. This is 1545. Right now, ladies and gentlemen, pay close attention to this. I wish I could ask if there was a retest here. Was there any retest here? No. You know why? The green candles that came into the zone did not close inside the zone. They closed above the zone. In this case, no entry. But look at something. Just pay close attention to this. Now, there was no entry on the 15 minutes. Guess what you'd have done? You'd have waited for price to break that zone again on the 1 hour time frame. And it did here. This is another break here. If you see this particular red candle here, is the first break. Price pulled back into the zone. We did not get any retest. The second break was this one here. Right here. Now, let's go check 15 minutes. Let's go check 15 minutes. So, if we move this 45, boom. Ladies and gentlemen, please tell me, was there retest here? There was. You can see that green candle went into the zone, closed inside the zone, followed by red candle. So if we're going to put a short position here at the close of this red candle, guess what happened? Did he take profit again? He did. In fact, you'd have done 1 to 2, not just 1 to 2 on this. You'd have done 1 to 3 on this. See, some of you will become millionaires by force, by fire, by force, by fire, just trading synthetic indices. I'm excited about this. If there's any prayer I'm asking God for now, it's just the fact that I should have the grace and opportunity to always show up on Saturdays. For real. This thing is a no-brainer. Now, look at what happened. You risking this, right, to make this. This is how you can literally flip a $20 account to $1,000 account in 1 month. It's not a game of wait. I want you all to how many entries have we taken so far? This is the second entry. But do you see the potential? Let me put an eclipse tool on that. Did you see the potential on this? This is another entry here. You saw the first potential. You first saw the first entry. This is the second one. Let me clear this. Right now, guess what? This is another zone here. Price did a break of this zone right here. He did the break of this zone right here. So right here now, let's go check 15 minutes. And I'll call it a day here. I'm so sorry. This session is supposed to just be for 30 minutes. But you know the way introductory calls are. You know the way they look like. You have to introduce, talk about it. Going forward, I'm just going to work with 30 minutes only. So you move this to 45. This is 45 right here. And then guess what? This is a retest here. If you look at it closely, that green candle came into the zone right here, closed inside the zone. You have the red candle. So if you're taking a trade here, boom. Did it take profit again? It did. Not only did it take profit, did you see the distance? Ladies and gentlemen, this is the ARC strategy. Now, 5 opportunities to make money. You could not get into 2 because price did not give you a confirmation, because your strategy confirmation, because you didn't get your strategy confirmation. Yeah, it's amazing that way, as long as you stick to the rules. See, I do not feel bad. I do not feel any form of emotional detachment when I lose a trade based on my ability to follow my strategy principles. The trades I lose and I feel bad about are the ones that I took outside my strategy rules. If you've tried out a strategy in the past and you figured out that based on backtesting, you took 10 trades, the strategy gave you 7 wins with 3 losses. If you follow the same strategy, if you follow the same rules you used to backtest, if you follow them again, going forward and you take 10 trades, you would win 7 and above and lose 3 and below. But the only reason why you lose more than you win is because probably at the time when you lose one trade, you decided to add another jara, like my people say, you decided to add another pepper to the strategy. The strategy you were using before is just rice and beans. Now, because you do rice and beans and you lost a trade, you feel like, oh, maybe rice and beans, there's something wrong with rice and beans. Let me add pepper to it. Let me add pepper to it and see what happens. You now add pepper to it, you win the second trade. The third trade, you do rice, beans, and pepper, you lose the third trade, and you're like, oh, I think I should add something to it. Oh, in fact, sometimes you see, let me tell you the bad character most of us have. You have the character of, are you guys ready for this truth? You have the character of wanting to understand the reason why you lose the trade, because you're expecting that all the trades you take with a strategy are supposed to be wins. No. Have you forgotten when you were backtesting, you had losses? You had 3 losses, but you had 7 wins. So why then should you take a trade using that same strategy, and then when you lose, you want to add pepper to it? Now you add pepper to it, you lose again, you now add rice, beans, pepper, and pomo. You see the inconsistency. Now you're becoming so inconsistent in executing trades, and because you're becoming inconsistent in executing trades, guess what happens? Your trading results will be inconsistent. Let me leave it at this. So I want to appreciate each and every one of you for jumping on today's session. I'm super excited about this journey. Like I said, I'm super excited about synthetic indices and the opportunity you have to trade this 24/7. Going into next week, this is just like an intro call. So going into next week, I'm looking at the possible means. Either I'll create a WhatsApp group or a Telegram channel. I'm still looking at the modalities to that, where I'll be sending setups as regards each of these instruments, so that you can leverage over them. And at the end of the week, and the following week, we have something amazing to say. GPP JPY that analyzed on the Forex call on Monday did amazingly well. I think I got one person who texted me to tell me that he made so much money. He made so much money with it. Well, that will be all for today. I want to appreciate each and every one of you for taking out your time. I'll see you all by next week. I'll see you all by Monday for the Forex training call. And then I'll see you by next week, Saturday, for a continuation on this synthetic indices trading. You all take care. Peace.